Today, I want to talk about how Jamie Dimon just exposed synthetic or illegal shorts in a live interview, basically hinting and saying that it's absolutely going on in our markets. Now, I want to explain why Jamie is turning on these shorts in such a public way and how that's likely to impact AMC. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, first, let's hear what Jamie Dimon actually had to say and then explain how that impacts AMC.
Do we need regulators to look at short sellers of banks?
Yes. You know, look, my folks would tell me that that's not the problem, the short selling ban. If you actually analyze stocks and short sales, doesn't seem that big a deal. I think they may partially be wrong because, as you know, some people are unscrupulous and they use other means to go short. I think that if you look at the detail, the SEC has the enforcement capability to look at what people are doing by name in options, derivatives, short sales, and they should go. If someone's doing anything wrong, people are in collusion, or people going short and then making a tweet, about a bank, they should go after them. And vigorously, and they should be punished to the full extent the law allows it. So I think it's possible it's taking place. We have no evidence of it, but my experience in life has been don't assume too much.
Do you think that they're looking into it?
I hope so. I don't know.
So actually, Jamie Dimon right there just dropped a bunch of bombs. He was basically saying that people just usually shorting banks isn't really the problem, but it's these unscrupulous short sellers that are shorting banks through derivatives and different instruments like swaps that are likely doing so illegally. Now, Jamie also added, or also let slip, that the SEC actually has full access to these people by name to see exactly what they're doing. Now, that's something I didn't actually know the SEC had control over. So basically, the SEC have been able to see the entire time exactly which fund is synthetically shorting not just these banks, but other stocks like AMC as well. And again, Jamie Dimon reckons that these unscrupulous illegal short sellers should be punished to the full extent of the law. Now you may think, hang on a second, Tom, that's probably not going to impact AMC too much, especially if they just investigate short sellers shorting banks or just restrict this short selling ban to banks alone. But don't forget, it's likely those same bad actors that are unscrupulously or illegally short selling bank stocks are also doing the exact same thing to other stocks, namely AMC as well. So if you stop this illegal short selling at its core, aka you stop the hedge funds that are committing this illegal short selling, whether they're illegally shorting banks or illegally shorting AMC, it doesn't really matter because they're going to be stopped from doing both. Obviously, if the SEC investigates these short sellers for illegally short selling banks and decides to close down the hedge fund and send the hedge fund manager to prison, obviously that fund is not going to continue shorting AMC because it's already closed down. So instead of the SEC just shutting down the illegal short selling of banks, but not on AMC, they're going to go straight to the source and obviously investigate the individual funds. Yes, it will likely just be the funds illegally shorting banks, but it's going to be the same funds that are illegally shorting banks that are also illegally shorting other stocks too. Now, Dave Lauer tweeted saying that Jamie Dimon on short selling attacks on bank stocks. My folks tell me if you actually analyse stocks and short sales, it's not that big a deal. I think they may be partially wrong, because as you know, some people are unscrupulous and they use other means to go short. They've added by saying then he says the SEC should look at what people are doing in options, derivatives and short sales through different means. And Jamie obviously wonders whether people are colluding to drive down stock prices and using social media to set off runs on stocks. And therefore clearly Jamie Dimon doesn't think our current visibility into short selling is adequate and that he's concerned about abusive short selling practices. Obviously, it seems now the shoe is on the other foot and Jamie Dimon is actually the recipient of this naked short selling or illegal short selling. He's all of a sudden very unhappy. Obviously, when this illegal short selling is making JP Morgan money, he's not got a complaint to air. But as soon as JP Morgan is losing money from illegal shorting or being impacted themselves from illegal shorting, all of a sudden he's going to stand up for it. As Biggums tweeted, he said, "You can't make this up. The guy who's bitching about shorting is backing most of the hedge funds in the US." This article says add 4,281 hedge fund clients to what makes JP Morgan Chase the riskiest mega bank in the US. According to a Yale School of Management study in 2013, JP Morgan Chase had 1,339 hedge fund clients. As of July last year, that number had soared to 4,281. This is basically saying that over 4,000 hedge funds had been set up in JP Morgan offices using JP Morgan software and obviously giving kickbacks to JP Morgan on the profits that they generated. Maybe they were even seeded or given money by JP Morgan themselves to invest on JP Morgan's behalf. And therefore, obviously, while JP Morgan was receiving kickbacks from this illegal shorting, JP Morgan were perfectly happy with everything that was going on, no matter how illegal it was. But obviously now JP Morgan is no longer receiving these kickbacks and is actually the victim of this naked shorting attack. Jamie Dimon obviously wants to stand up for the little guys. But as Sextuple Chin Capital tweeted, he thinks there's something much more nefarious or much more serious going on. He tweeted saying, if you've only been doing this since the great financial crash or more recently, let me let you in on a little secret. He said when bank CEOs start asking for short sale bans and complaining in live interviews and saying they should be investigated to the full extent of the law, we have a major problem. Especially as some of these major banks have even been asking for American deposit withdrawal bans, there is clearly a massive problem. It's likely this current banking crisis and the current spiralling withdrawals isn't just impacting these regional banks, it's also impacting these major banks as well. Obviously at the moment it's mostly these regional banks that are feeling the pinch and going bankrupt, but actually major banks are feeling the exact same pinch, they just have more capital to lose. So therefore it's likely we may even see some major banks going bankrupt over the next few months. We're likely to see more regional banks going bankrupt in the next few weeks, but it's going to take a little bit longer until we see those major banks going as well. As these major banks have more capital, they can obviously withstand more withdrawals, but as there's no end in sight to this spiralling withdrawals, it's likely we may even see some major banks going under as well. You may also remember from my video earlier today, the FDIC had a special announcement to make, and now the FDIC have made their announcement. As Spence tweeted, he said the FDIC is to enact a special assessment fee on larger banks to recoup losses due to recent bank failures where 100% of deposits were insured, regardless of the size or of being insured or not. He said this is a very bad sign. If the FDIC is already leveraging assessments on big banks, it means they know more regionals are about to eat dirt. It seems the FDIC is going to start asking some of these major banks to chip in on any future bankruptcies and obviously cover some of these losses or cover some of these deposits. But as Sextuple Chin Capital tweeted, it's likely that actually these major banks probably don't have the cash to chip in as they're struggling themselves as well. So that's only going to exacerbate the current problem, and that's exactly why Jamie Dimon is begging for the short sellers to stop and is exposing these illegal shorters in live interviews. It wouldn't surprise me if this continues getting worse, that Jamie Dimon does more interviews and even ends up naming names. Now, you may have also seen that Robinhood is expected to start allowing 24-hour trading, but just on weekdays. But interestingly, it's only for specific selected stocks and ETFs. Who's willing to bet that AMC, GameStop and a number of other meme stocks are going to be included in these selected stocks that are going to be allowed to trade 24/7? That's just going to give these hedge funds, these market makers and Robinhood more time during the day to manipulate stocks of retail interest. Clearly, having just the trading hours isn't long enough for these hedge funds to keep AMC and GameStop suppressed. Clearly, even having the extended hours still isn't enough to keep AMC and GameStop suppressed. And therefore, not only do they need extended hours trading, but they need 24-hour trading to be able to stop the AMC and GameStop squeezes. As I said, I do think at one point these hedge funds are going to run out of tricks in their book and run out of games to play, and at that point both AMC and GameStop will end up squeezing. Things are just going to continue getting worse for these hedge funds, especially as these current bank runs continue, and at some point it will be Judgment Day. Now, interestingly, you may have also seen that Hindenburg recently accused Carl Icahn of running a Ponzi scheme, but now even the feds are getting involved. This article says that Carl Icahn is under federal investigation after he recently blasted the short seller. And it says normally the instigator, this activist investor, was slow to respond to Hindenburg's report that alleged inflated assets. activist investor Carl Icahn disclosed that his investment company is under investigation by federal prosecutors and went on the attack against the short seller that likely spurred the inquiry, accusing it of wantonly destroying property and harming innocent civilians. Icahn Enterprises was targeted by short seller Hindenburg Research earlier this month. The next day, the US Attorney's Office of the Southern District of New York contacted Icahn Enterprises asking for information about the value of its assets, corporate governance dividends, and other topics. He said that obviously he is cooperating with the investigation and supposedly doesn't believe it will have a significant impact on the business. But obviously, if anyone is committing crimes, that's exactly what they're likely to say. I personally think it will be very interesting to see how this investigation into Carl Icahn's company goes and whether he's been doing anything nefarious. It does say that his company lost $270 million in the first quarter of 2023 when the company's own short bets backfired. So clearly Carl Icahn has recently been shorting tons and tons of stocks, so it looks like he may be receiving his demise. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.